My end goal is to get people started in investing. That's why we do this podcast. It's one of the main tenets of my company is to get people started in investing. And so however it takes to get you to dedicate some time, some energy, and some brain power to learning what a good investment is, how to analyze good investments, to dig deeper into what makes a company tick, that's a win.
Welcome into the Get Invested podcast, a podcast about all things real estate and real estate investing, brought to you by Capital Velocity Investments and a part of the Matthias Talks Investing Substack. Hello, everybody. Welcome into another edition of the Get Invested podcast. We're happy to be here with you. I'm Jordan.
I'm Matthias.
And we're here to talk all things investing, real estate, and real estate investing. And as always, are pumped to do so. But before we jump into our topic today, which is going to be a more general one, I would say, than our kind of deep conversation about whether to roll your gains over or not, which was last time we tried to go back and forth, But before we get into that, Matthias, what's up, man? What's been going on with you? I know you've been traveling. What else has been going on?
Yeah, just the kids are back in school. It's getting back into the routine. We only had Wednesday, Thursday, and Friday, and I was out of town Wednesday and Thursday, so really, we got a halfway to a routine this week, and then we're going to get the weekend. And then next week will be a full week of school, daycare, get kids on the bus and stuff. But yeah, man, just looking at properties, and we're ready to hit the ground running 2026. It's exciting. We'll be making offers and finding deals. They're coming at me left and right. So it's a target rich environment. So we're going to have some, I'm confident there'll be some good deals, and the cool thing is that when you're sure that you're going to look at more deals, it gives you that much more confidence to just stick with your price. Like, hey, man, if we don't get this one at a right price, then okay, we'll wait for the next one because they're coming. Any given time we're looking at 3-4 deals, something like that. So I'm excited about it. I think it's going to be a good year. And then other than that, just living life. Kids getting older. Aaron is. We were doing bikes and scooters in the cul-de-sac next to the house yesterday, and Aaron decided he's figuring out how he likes to dismount from his scooter while full speed on purpose, not like a crash, but like hey, I'm going to jump off, see what happens. And
yeah,
I mean, I could guess what happens. I'm sure you can guess what happens. Yeah. He didn't guess what was going to happen, so that's yeah. Well, I mean, he didn't. It's just more. He's got like multiple Band-Aids everywhere. He's like, I got a lot of scratches on my leg, Dad. And I was like, yeah, you sure do, buddy. Nice work. I mean, he's a little boy.
There's something about, I remember that feel like you want to be able to dismount. Like, you don't want to come to a complete stop. I mean, that's not as cool. It's not as
jump
exciting.
Off, maybe tuck and roll,
Yeah, you got to, maybe you just need to make a very quick transition to the ground.
Well, he did.
This is like Ethan Hunt level stuff, man. You can't
absolutely
come to a safe stop.
That guy sprints and then everywhere.
Everywhere. No one runs more watchably than Tom Cruise.
That is 100%. And there's never been a movie that he's filmed where he's not at some point sprinting full speed away from or towards something. Usually towards something.
Well, he's definitely always at some point or another sprinting towards the camera. But
yes.
Every once in a while, though, he is actually running from people. And you'll get like every once in a while you'll get him from behind, but it's really always side or front. He just carries the intensity of that run on his face so well. He used to, I gotta say, he has in his past made movies in which he was not running, but it's been a minute.
Yes, that's a good point. Like Risky Business or something way back in the day. I don't think there was. I don't know if there was sprinting in that one.
What is it? A Few Good Men, stuff like that, where like more dramatic pieces. Yeah, I don't think he was. He doesn't. I mean, he gets in Jack Nicklaus's face, but he doesn't like run at him.
How funny would that be in the courtroom? Just
so.
Yeah, what are you up to? Anything going on over there?
Not really. I was going to ask though. I mean, a few things, but I was just going to ask that. So Aaron learned this lesson like riding on the sidewalk or the asphalt. Okay, that's a good. There's like this theory of like trying to teach them how to ride a bike just on the grass, and it's like, well, they also need to know the consequences. of not doing it correctly.
Or to learn to bail onto the grass, off of
Yeah.
the concrete, off into the grass. Yeah.
It's interesting. There's actually a lot of research that shows that like the way we've made playgrounds like incredibly safe, that actually kind of
They get hurt more.
harm development because they need to learn. It's a pretty low stakes to like fall off a playground thing onto the dirt, right? It's going to hurt, but it's not going to be life threatening. But when they're young, like sticks in the brain, like, hey, be careful. But now it's like everything's so soft, and you could land on like cushion mulch or whatever. And they don't really learn it till they're like up really high in a tree or something, and
then they got problems. Yeah,
the consequences are higher. Yeah. Sounds like he handled it like a champ, though. He just got up and kept moving.
Yep, he's fine.
On these trips back and forth between Mississippi, I have to ask: have you ever figured out a favorite spot to stop? Because when I was driving back and forth between Georgia and Charlotte, I had like the one place that I always stopped. Now, granted, this is actually it's about the same amount of drive. Yours is a little bit longer, but I just was wondering if there's like that one place on 10. No cozy little gas station that's yours.
No, I not really. I mean, I can do it in less. I mean, I don't in much less than a tank of gas. About a half a tank of gas, really.
So you don't need to stop at all.
So I don't have to stop unless I need food or to use the restroom or something. But I think I held it for like 2 hours yesterday, and I just because I was trying to get back for a call. So I was like, I'll just when I get to the office, I'll deal with that. So I don't really have one. Typically I'm like on the way out there, I dropped Aaron off at school, and then I had a meeting literally 3 hours later, and it's a 3-hour trip. So I filled up beforehand, and I was like, I'll stop when I get to the meeting. Right. Made up a little time on the road, but yeah, I mean, I don't have one. It's I-10, and it's kind of desolate, and I don't want to stop in Mobile or in Pensacola. Yeah, and then there's not a lot else.
You can't.
You know what I mean?
Get out. Yeah, absolutely.
Yeah. So I was like, there's a couple of decent travel plazas I have stopped, to fill up or whatever. The good thing is that it's like some of the cheapest gas in the country on I-10 near, Mobile, and all the refineries and everything's right there.
Not far from refineries, and the taxes on the gas is probably not that high. Yeah, that's
So it's nice.
Well, I was just wondering because I that same thing especially when I was driving down, I was usually driving to go teach. That's why I had to do it in the first place, right? And so I would basically just drive in, change, walk on campus, and teach. But I don't know, on the way back, I don't know, it was just nice to like break it up a little bit, get a little snack. The Quick Trips have vitamin water on tap, like on the fountain.
Really?
So like the big gulp. This is like one of the what some people that I would roll my eyes at would call a hack. No, you could get a big gulp or whatever they call it. It's not a big gulp. That's 7-Eleven.
Sure, though. The large thing, yeah.
Whatever they call it, for like 79 cents or $1 or whatever, depending on the size of vitamin water, when 16 ounces in a bottle costs you like $2.50. And I usually played basketball and then left and drove back up. So yeah, that has endeared me to Quick Trip.
I do like Quick Trips. There's usually good selection and relatively clean compared to
pretty much always
others.
Yeah. They got people on top of it. And then I always love their like dual line thing where they've got an attendant and there's credit card machines on either side of them, and they're like, okay, here, go. And they like juggle you back and forth. Anywho, with us, man, I don't know. Not a lot. Just this, that, and the other, I guess the big thing this weekend in some way would be, and sorry, I don't want to rub this in, but the Panthers have a playoff game for the first time since 2017.
Oh, wow.
So that's exciting. I mean, I fully expect to lose, but that's exciting.
So do the books. Goodness, that line is ridiculous for a playoff game.
I haven't looked at it.
I think it's 14.
I might take it because we already beat them once, but I mean, again, not saying we're going to win, but we have looked pretty terrible recently, though. I love how we just backed into the playoffs by people losing.
Nobody else wanted it in the South either.
Really, just no one wanted it. Obviously the Falcons helping us get in was fun. It felt dirty, like rooting for them on Sunday, but I did it. And not dirty in a fun way, like the Dirty Bird. I mean, in a bad way.
Nice.
There are actually a bunch of watch parties in Charlotte to like everyone to like hold
I would imagine. Yeah.
hold their nose and cheer for Atlanta. Yeah. I'm surprised they didn't blow it just for that reason. I guess because we definitely hate each other more than like the Saints in Tampa have their thing, and then we kind of have our thing because the I-85 thing. But I wouldn't have put it past them. But it didn't do Raheem Morris any good to win it. That's for sure.
Nope.
Anyway, all right, that's a tangent. That's Panthers corner, but that's exciting. Other than that, just like you said, just living life, man. Just doing it out here in this gray 50s-ish January that we're dealing with here.
75 and sunny out there, a little humid. It's been foggy. It's hot. Shorts and t-shirt weather.
I don't want that. I don't want that. I would prefer it to actually be 40 here. But,
in January.
But I mean, it's warm enough to go play disc golf, so that's cool. Though, I'm going to go back to Quick Trip as our segue here because it kind of, in a way, encapsulates what we want to talk about today, which is, I guess, just a discussion about an approach to investing and the mindset of investing and what it means to invest, which is doing research and making calculated moves, taking calculated risk, etc. And we're not necessarily going to talk about real estate investing so much as just investing in general. And the thesis, I guess you could say, of this episode is mine. There's the idea of do what you know, or invest. It's always write what you know, do what you know. I mean, they're all the same, and then to invest what you know. But you know something probably because you like it. Now, we all understand that Chandler Bing had to deal with the weenus and he hated it. So there are situations in which you definitely know things that you don't like.
Funny.
But nice. There's always going to be a Venn diagram of knowing and liking. And since for most of us out there, we're not, I mean, I can't imagine anybody who's an institutional trader is listening to this podcast. You're doing this on the side, so might as well make it fun. And that's where Quick Trip comes in, because not that I don't have a position in Quick Trip, but that would be exactly the kind of company that I would want to dive into because I think they're excellent. And every time I go there, I have it's just a wonderful
pleasant experience
for what it is, right? Yeah. At no point have I ever walked away from a Quick Trip being like, ugh, or any version of that, right? So anyways, that's where we're going to get into. That's I threw it out there. What you got? Hit it back over.
Yeah, I mean, I think, always going to make a reference to Warren Buffett. He says, invest in what you know. Diversify. Diversifying is kind of what you do when you have the wealth, when you've built the wealth and you're protecting it. But in order to get wealthy and to build the wealth, there's lots of experts and people I trust, including myself, that say, go with what you know, go hard in what you know, build it there. And then when you've kind of achieved your goals, diversify out from there. But I think, and just as a general, I love investing, obsessed with it, since forever, as long as I can remember. I want more people to invest because I think it's the best way to take charge of your own financial future. God knows what's going to go on with the economy, with Social Security and all that stuff. So whatever gets people to invest more, I'm in favor of that. And I think just the general psychology of investing in what you know, what you like, you're more likely, one, to do, like you said, to do the research, to figure out, hey, what companies do this well, or I appreciate the value proposition of Quick Trip, so I'd like to look into what they, particularly, can they expand more? What are their growth prospects? All those things, like learning things because you're interested in it. And if you're an AI person, you're intrigued by technology, whether it be, there's all sorts of fun things to get into. But I think in general, if it's something you like and something and you're, like you said, you're more likely to know more about what you like because it's just something that interests you. I think you're more likely to end up investing in that sector, that area, a company like that, or a particular value proposition. I think you're more likely to do it. You're more likely to make a more calculated, a better, a more well-educated investment based on something that you like and know. So all of those, in my opinion, all of those lead and work together to get you to invest more, and perhaps even prioritize investing a little higher once you kind of get into it. All of those things I think are a huge win for everybody, anybody.
Yeah. Now, so the invest what you know thing, right? Warren Buffett, all that. I was taking, that's kind of what we're saying here. At least what I'm saying here is that the know and the like, right, are going to go hand in hand. Right.
Sure.
And so that's a way to kind of get into the point of actually knowing something. And there's a lot of different ways that we can talk about what that would look like. But it did make me think of the whole GameStop situation a few years ago. Good movie with Paul Dano and Seth Rogen, by the way, called Dumb Money, about that whole thing. But
I have not watched that. I probably should.
Where I guess why I bring that up is say that's not what we're talking about. Like, that guy was actually, that was his job, right? And he knew what he was doing to, like, in a way, he liked the stock, sure, like, and he liked GameStop, yes. But just liking a business doesn't mean that in and of itself it is
makes it a good investment.
Yeah. So I just wanted to make sure we put that out.
That's a good point. That's a good point. And every, like, you can like a technology, Blockbuster. You could have loved. We all did like Blockbuster.
Yeah.
But that doesn't necessarily mean that it's being run in a way that will create long-term growth. But that's kind of what you're not just going to look into random companies and say, hey, what's their track record of adapting to new situations and surviving downturns and things like that. Unless it's a company you like, you're not just going to, like, look up random companies. You're going to find companies that you like, technologies that you like, or whatever, what have you, industries that you like, and then that'll guide your research. And I think that's a good point, is that just because you like a particular service or offering or whatever it is that somebody has, there's more required than just liking it and thinking it's a good thing that they offer. You know what I mean? So if, for instance, we'll use your Quick Trip example, is that, like, hey, I don't know anything about the CEO of or the board or the track record of Quick Trip when it comes to, oil price fluctuations. How do they do? How much of their business is based on actual gasoline sales, and how much is based on convenience store type sales, and the, inside, all these different things that you would check into. But it's guided by something that, hey, I appreciate this service. I'm assuming, I think it's objectively better than, some of the other offerings that are, on every street corner. So that prompts you to dig a little deeper into the financial track record and the, hey, what's their leverage situation? How indebted are they? That kind of thing. And you can start, informing your investment even more on that side. But it's a great place, and you're more likely, like we've been saying, you're more likely to be interested enough to dig into those boring financial, balance sheets and whatnot in order to determine whether or not it's a good investment. But you're more likely to do it if it's something you're interested in or appreciate.
Yeah, of course, I had to bring that wrinkle into it, I guess. But like you said, that was what I was thinking, was if you have a product that you love, right? And I feel like we always talk about, when we talk about this kind of thing, we're either talking about real estate, or we use kind of prominent examples that everybody knows, right? Like the Magnificent Seven, or some other kind of blue chip.
Everybody has an iPhone, so Apple must be a good company.
Or even, I don't know. I was talking about Southwest Airlines. Like, you can talk about companies that everyone is going to have come into contact with, right? In some form or fashion, those ones are used. But I'm actually advocating, I guess, if advocating maybe seem like maybe a strong suggesting, let's say.
There you go.
That if there's a product you use every day, right, and you're like, okay, and you've been telling yourself, I really need to, like, learn more about this investing thing. I need to get involved. I have a little bit of, I got $1,000. I can put it in Robinhood and whatever. Or, I say Robinhood just because it's at your fingertips. You can do it yourself rather.
Sure.
Than,
I get what you're saying.
Yeah. Well, look at what you're using every day, right? That you like, that you respect. Look into how it's
why,
really
and
like,
think about why you use it every day too. Like, why do I use this every day? Because it's the best option for whatever thing I'm doing.
and you're like, I'm at the tail end of this process. How did it get to this point? Right. I mean, I guess you could figure out how things are made and produced but also how the company is run that makes that product. And that can be complicated because, for instance, like everyday stuff, I'm like, oh, I'm looking down at my Crest.
Yeah. Procter and Gamble. Here we go.
Yeah. I'm like, well, that's there's a lot of layers between this one tube of toothpaste and what I can find on Procter and Gamble. So it can be a little bit abstract, but at the same time, there's going to be divisions within that, and it can kind of give you an entry point. I guess is what that's my idea, is that it's an entry point. And Procter and Gamble is probably a bad scenario because everyone knows. I would imagine most people know of Procter and Gamble in some form or fashion. You definitely, if you don't know that's who's making it,
you have products all over your house by Procter and Gamble.
Which
that's for sure.
This seems like a pretty safe company to invest in because I have their products.
Consumer goods, because everybody buys them. So
which is the kind of thing I don't feel like we ever talk about that much, is the consumer goods, which is a big umbrella. It could be like food products and like General Mills. It could be the kinds of things that Procter & Gamble make, everything from Tide to toothpaste to
toothpicks. I mean, good. Probably not toothpicks.
Half of CVS, that was a bad essentially. Like, I don't know, that, and that's even a fun kind of experiment to think about all the companies involved with getting you that thing, right? Like, oh, okay, Procter & Gamble made it, but like, I get it from CVS. Oh, well, CVS is also a publicly traded company. And so I think one of the things I've learned is you'd be surprised, first of all, how many companies you come in contact with are publicly traded. I think the average person would be, and that they're more accessible than you would think. That makes sense.
Yeah.
Right? You don't have to like say, hey, I want to get involved with CVS. What am I need to buy? 100,000, 200,000, 300,000? No, you can, someone will happily sell you 20.
Yep. Or one share. I know people who own one share of companies they're interested in.
Yeah. Exactly. So I'm going to shut up here and let you respond, but I want to finish by saying, if you're interested in how a product comes to fruition, you can find that out. That can lead you to like kind of the structures that make that possible. Because I'm just thinking about this as a trail, right? How you like kind of just teach yourself how to look into things as you are looking into things. And the last thing I'm going to say before I move it over to you is, a lot of people might be surprised at how much information is available. I think, as that movie suggested, dumb money, right? People who are not institutional players, right, are the dumb money in the stock market because they're not the people doing it for a living. Well, that gap is still there for sure. They know they know a lot more because it's their job, but the amount of information available is available for most people, I guess is what I want to say. I'm not saying that we're going to have the same insights as big financial institutions, but there's just way more out there than you would think, I guess.
Yeah. And I think, kind of like we said at the beginning, I think the whole goal is to, obviously I want people to invest more and focus more on investing and start building. So I think the more that you learn and what makes you learn, what prompts you to learn is good. And then as you learn, you just become more adept at choosing, picking, and learning how to learn, basically, so that, okay, so what everybody's talking about, NVIDIA. So I've been looking into for a long time. I'm just making this up, but let's say I've been looking into, I don't know, Microsoft or something that I've been looking into for a long time. Obviously, they're a huge company. That's probably a bad example, but like you've done a little bit more research because you have a Microsoft computer. You think everybody uses one, so on. So you're like, okay, well, I remember when I was looking into Microsoft. Now everybody's talking about this NVIDIA stock. I got a better idea of how to look into, hey, does it really have the growth? Do I agree with everyone, basically? And you have something to base it on other than just, I heard about this stock and everybody's buying it. Because I heard about the stock and everybody's buying it is a great way to lose money, because everybody who knows fundamentals and understands how the markets work goes, all right, well, I'm about to sell as soon as everybody else jumps into this, because they're gonna run up the price above what it's actually worth. I'm gonna sell. I'm gonna make a killing off of everybody hearing that I bought stocks 6 months ago. and that's how it works. Everybody rushes to buy whatever Warren Buffett or, whoever some famous investor buys or whatever a famous fund buys. Everybody goes, oh, cool. They know something. They did my research for me. I'll go buy. It was like, well, they bought a while ago at an attractive price. You're buying it on the price that everybody. So I guess what I'm trying to say is that knowing more about the fundamentals is a great asset to your ability to invest successfully over the long term. And something you said right at the end there was that, hey, you'd be surprised what information is available. Well, the answer is it's all available. They have to, like by SEC, right. Like they have to release all their, barring fraud where they're publishing fraudulent data, they have to publish everything. Now, it may not mean anything to you if you don't know what you're looking at and don't understand how to analyze it. But something that popped into my head when you were talking about that is that we've got this crazy tool now that you could just tell it to tell you what you need to know about companies. AI. You can literally just throw, hey, what's Chevron doing? How are they doing compared to their competitors? What's their debt service history? How did they? You just ask it questions, and it'll, and it'll tell you what the things you want to know. You could just think of questions to ask it, and it'll tell you. You're basically your little answer box that's even smarter than Google. And it'll tailor everything you need to be able to make an educated guess, provided it's pulling from non-fraudulent data, obviously. But I think the AI, something that it's going to be able to do is going to be able to digest all those huge financial statements that they release quarterly, that these multi-billion-dollar companies release quarterly, and it's going to be able to kind of digest it for you and tell you what does this mean? How'd they do compared to last time? Why did they do better or worse or whatever? Or did they expect it? Did they not expect it? All these different things that the market, that drives everyday buying and selling of stocks all over the market. It's going to make a lot more sense to you if you're able to if you have your little AI tools that'll, you won't need your MBA and your, financial analysis CPA degree to be able to read all the financial statements and learn how a company is doing. You'll be able to ask AI to help you sift through all the mountains of data and make a good decision that way.
Yes, that is true. I do want to say, though, that large language models, which is what we're referring to when we say AI, are first of all early stage, and they're only as good as what they have been fed and taught. And I can say this as someone who actually works as a side hustle on large language models. So, I guess what I want to just say very frankly, if you don't know anything about investing in financials and what, earnings per share means and, profit to earn or price share to earnings and all of those ratios, you do need to know those kind of things. You need to know enough to ask AI the right questions.
100%. I agree with that. Yeah.
It will hallucinate. It will make up data to fill in its own gaps. One of the interesting things about my side hustle, honestly, I sometimes spend more time doing this than the things that actually make me money, is I have access to all of the, not all, but a good portion of the kind of beta advanced versions of the LLMs, that ones that you would know if you'd heard them, of the major companies, because this company works and helps those people develop them, right? So, and part of the reason they want us to use them and we have access to it, it's called the playground, is to assess it, right? And we can ask two different ones at the same time, the same question, all kinds of things like that. And then part of the goal is to push back on it, right? And say, well, this is actually inaccurate. You made this up. I've actually used it a couple of times producing our podcast, and this is the best one. I've often said, okay, pull out something you think is a good quote, to put at the beginning of the episode, and it'll give me 5 quotes, and I look at them, I'm like, neither of us said anything that direct and pithy in this conversation. There's no way that was actually from the transcript. And I point that out, they're like, oh no, that's not from the transcript. I condensed and
interesting.
Yes. So this I did not intend this to be a a crash course on AI, large language models, but I will just say that yes, they can be useful. And things like Gemini, for instance, is often more research based and will provide you sources. That's the other thing, is you can check its work, right? And there's a few others. Perplex, I think, is another one that's really good.
Perplexity.
Yeah, Perplexity. Yeah, and it has a more academic bent, so it'll actually find you very like hard articles and stuff. So you have to probably learn a little bit about large language models to make this work, and you can choose whichever one you choose to better answer your questions if you're pushing back on it a little bit and then clarifying and doing some due diligence on that. So yes, it is very much a tool. What it is really good at is, say you go to Yahoo Finance, and I feel like I'm giving shout outs to a lot of companies that I don't really necessarily want to give a shout out to. I do like Robinhood, but Yahoo is so outdated except for this. Yahoo Finance, you can pull up a stock and it has a wealth of information, like recent news about it. It's 1 day, 1 month, 5 day, 6 month, 3 month, like track record of the share price, all of the kind of assessments that people look at, including earning per share, its price per what it
dividend yield, forward yield,
what it was expected, did it meet, analyst ratings of it, all kinds of things. So I guess what I meant, yes, publicly traded companies have to put out to the public what is going on. So yes, you could just pull up NVIDIA's like entire financial statement and be like, what do they spend money on? I mean, top line, obviously, but you can see it. One of the things, I guess what I was really saying is, yes, that is all out there, but what is also out there is a lot of just what people have assessed about this stock, and they're like kind of brought a lot of information together that you can look at and get a sense of things, and then do deep dives however you would like, I guess. So I think that's what I really meant, was you'd be surprised how much is actually already accessible in a way you wouldn't assume that it is accessible.
Not something that's already distilled a little bit for you. Yeah.
And sure, every single one of these things you click on in some form of fashion is going to try to sell you like their subscription for like the inside know, right? I mean, everybody does it. All of these companies, Morningstar, Motley Fool. Which I like Motley Fool. I don't buy Motley Fool, pay Motley Fool. It is actually, there's a Carolina guy who's like involved in it from the beginning, one of the guys. So I'm a big fan of Motley Fool, but yeah, they're going to show you like this much, and then they're going to, try to get you to buy. But
we've got more behind this paywall.
Exactly. Okay, that's fine. Read what they give you, right? And if you find their information worthwhile, then maybe you do pay the, I don't know, it's like $100 a year or something. For that service. So just to distill this, you need to know enough about large language models, and you need to know enough about what you're looking at on the financials or assessments of shares, et cetera, in order to use AI in a way that will be beneficial to you.
Yeah.
But even beyond that, even more, I guess, old school, if I guess the internet's old school now.
Yeah. Which is crazy.
Go to like Yahoo Finance, look up that stock, and you can find a lot right there, for instance. And it's not the only place. I'm just using an example.
Yeah. Google does a very similar. If you put in like a stock ticker at the top of Google, it'll spit out a very similar page to what Yahoo Finance does. But I would also say that, if you're just looking at that splash page where it's like, all right, the price to earnings ratio, PE ratio, all these different things, just go to Investopedia, like in the next tab on your browser, and type in, what is a price to earnings ratio? What is a forward dividend yield? And it'll have like a really distilled, this is what this is. And then it makes sense to you. And that drives your learning and your overall investing knowledge. Like, okay, so if the price to earnings for two companies in the, before this came on, we were talking about Southwest, it's, for whatever reason right now, its price to earnings ratio, it's a lot higher than the competitors in its field. And that may be a good thing, that may be a bad thing. There's more to be looked into. So it's like, okay, well, if, back to Chevron. Okay, so if Chevron's price to earnings is way low compared to its competitors, maybe that means it's trading at a discount right now. And there's a bunch of other factors we look into, but once you start learning what these things mean, it gives you more insight into what. So okay, so this company, it seems like it's a good deal. You're adding things into the bucket of, hey, I should invest in this for the long term, and it might actually be a good investment at this time. And that's ultimately what I'd like you to do is learn more about investing, learn how to evaluate companies based on all these different things. Train your personal AI assistant to help you evaluate things and to pull data for you that from a place you can trust. And I think I think in all, I think that's what that's kind of what our episode today is about, is getting people, like, what will cause you to look as deep and get into the weeds on all these different things that we've been talking about is something you're interested in, something you like, something you use, something you're more likely to push past the initial, hey, I heard everybody was buying the stock, and go and dig, and maybe stock that nobody's talking about, something that you're like, hey, one of the craziest dividend aristocrats, and I'll be done after this, is like McCormick's, the company McCormick's. Like, it's one of the most stable dividends and growing dividends for the past like 70 years is McCormick's. It's a spice company. It's the most boring company in the world. Does nothing different. All it does is, like, your little,
it's the red cap company, right? Yeah, I'm pretty sure.
Yep. You go, I need more cinnamon. Well, you go to the thing and it's a McCormick. I guarantee you, it's at every grocery store in the country.
They're the baseline. Yep.
Exactly. And it's like, okay, cool. So, you got your Grandma Sue's special crab pot boil, but I guarantee you there's a McCormick's option right next to it in every single spice ever heard of by man. And it's been nobody ever talks about that company, but it's a fantastic investment and has been for the past like 70, 80 years. And it's just, it doesn't grow like an NVIDIA or anything. It doesn't shoot up, but in terms of long-term growth, it's just, and the dividend income, like it's crazy what you can do with a boring company that, as it turns out, everybody uses and has in their cabinet.
Right. Well, that's another, we've talked about before the difference between a growth stock where you're expecting the company's valuation to rise and therefore you make money that way, versus a stock that pays a decent dividend per share that you own. And that's another metric that is going to be on that spread that we're talking about. That
exactly.
Just two notes on the AI, I guess. It is going to, any of those things will be great at just giving you a great answer about what a thing is. And providing you more sources to look at it. Investopedia is fine too, but I'm just saying that's one where you can just ask it straight up, like, hey, tell me what this is. And it'll just, boom, give you everything you need right there. Unfortunately, if you are someone who is actually interested in AI, a lot of the ones you've heard about are not actually publicly traded companies yet.
Yeah.
So not yet. I don't want you to be disappointed. The ones that are being produced by companies you've already heard of, yes, but like the one that everybody knows, ChatGPT. Not so much, and I bring that up to say, we've been talking mainly about multi-billion-dollar companies and, all those things. So companies are varying sizes, and companies with smaller cap rates that are smaller in size are typically going to be considered more uncertain. So you could find that your company that you make something you really like, it may be a small company but if it's gotten to the point of having an IPO, obviously it's not your local business. Which, then that's just another thing to find out. Right. And I like so the spice one is great, because if you're really into cooking, you're like, wait, you may never even thought about it, like where this comes from. Although you're probably using a lot of fresh if you're really into cooking, which is a different thing. But looking around your house is actually an interesting thought experiment. Right. Like, what is, what's around here? What am I buying all the time? I don't know. I just kind of, in my head, it's like someone's like, oh, I really love this product. I didn't realize, and it could be something fun, right? Like it can be something that is absolutely not necessary, but fun. Let's be honest. A lot of the most valuable companies, that's exactly what they do. And you can go from, you can jump in from there. And I'm wearing this Wrexham warm up today, right? I feel like sports teams are the epitome of what we're talking about. If you can buy a sports team, obviously this is an outlandish example, but I just want to take it to the extreme, right?
Sure.
For effect. If you can buy a sports team, especially one that you have loved or root for, this is the ultimate I'm investing in the thing I love.
Yeah,
Right?
yeah, that's true.
Like, 'cause you were trying to make money with an organization that you have followed religiously.
You
for
know
no
more
money.
about than anybody. Yeah.
And you care so much about its success that, of course, you're going to, you know, go. Now, that example falls apart when we're talking about people who've already been very good at business to be able to do this for the most part. Although I guess in Wrexham's case, it's really more they were good at entertainment and now they
Branding and
yeah.
such. Yeah.
But I think that's why they're, crown jewels, as it were, right? Because it's something that they love already. I just remember Mark Cuban talking about after he bought the Mavs, and people who, I don't know, I'm assuming people who have listened to this are old enough to remember when the Mavs were a joke, and because that was pre Mark Cuban. And he literally just opened up the Dallas phone book and started calling people. For those of you, a phone book was this big thing of
yeah. Yeah, it's gonna blow your mind what people used to do.
Yeah. And he just called people to talk to him about the Mavs and if they would come as the owner, because he was, passionate about the project, I guess is my point.
Sure. Well, it worked out for him.
Yeah. Oh, yeah, it did. And I mean, now obviously he's moved on for various reasons, but so investment, it was a success in all the ways, because we don't know Mark Cuban because of his big payout from PayPal, I think was the thing that he made a lot of money on.
Was it PayPal? Was he one of the PayPal guys?
I think so. We don't, it was some telecom thing early on. We know him because he was the owner of the Mavs. Right. So I guess.
And then Shark Tank.
Yes. And then Shark Tank, to bring it back to Warren Buffett. I remember when Berkshire Hathaway took a major position in Mars that makes, M&Ms and Snickers and all these things. And his entire press conference was basically like, I've loved these products for a long time. Why would I not? Now he's not going to buy them into them if they're not
a good product or one that he appreciates.
If it's not a good product and, fundamentally sound in all ways, but that's just a good point, right? I mean, that's just an example of exactly that thing. I'm assuming he has a huge stake in Coca-Cola.
Still, yep.
Yeah, because that seems like he would never.
That's one of their biggest, longest holdings is Coke.
Yeah. I mean, because he famously drinks them all the time. So, well, I kind of rambled there, but I guess I was just trying to bring together.
Sure.
And the sports example is obviously that's much bigger than what we're talking about. I mean, I really started this thing about like you're putting on makeup and you're like, huh, what's this company or whatever? I don't know, but I've run out of steam there. I just wanted to.
I just petered out. Yeah, no, I think that's a good place to kind of close it out. I think, like I said, find something that you're interested in. My goal is to get you investing more, always, whether it's real estate, stocks, whatever it may be. I'm heavily invested in real estate. That's what I know. That's what I love. And for a whole bunch of other reasons, tax, all those things we've talked about ad nauseum. But my end goal is to get people started in investing. Right. That's why we do this podcast. That's why we do. That's what one of the main tenets of my company is to get people started in investing. And so, however it takes to get you to dedicate some time, some energy, and some brain power to learning what a good investment is, how to analyze good investments, to dig deeper into what makes a company tick. I think that's a win. That's that's kind of what we wanted to get across today is like, hey, a good way to help channel your attention is to find something you like, look into it, something you're interested in, a service you appreciate, whatever, and dig a little deeper, and all that will do is make you a better investor.
Yeah, and I don't feel like we provided any personal examples exactly, but that is honestly in a lot of ways where this started as well. Well, before we got on, we were talking about Southwest, which isn't really a personal example per se. It's just something I've noticed, and I did recently fly Southwest, and there's been a lot of news about them. But you brought up Royal Caribbean, right? Which
that's what I was about to say.
Yeah, you guys go and record those cruises all the time, and for me, one of the ones is actually something, and this is my last. I was going to bring a kind of background to this is the no can produce the enjoy too, of course. right? So one of the things I like to look into and follow and do invest in is pharmaceutical companies, because right out of college, I had that consulting gig where we did research for pharmaceutical companies. So I got to know that whole process and know how it works really well. And it's interesting. And obviously their successes and failures have major effect on, well, their successes for sure have major effect on all of us in some form or fashion. So I guess that would be the one I would provide right now, is that I love looking into those things and seeing what, new new therapies are out there. What is, biopharma's crazy right now doing the things they're doing, and then what kind of therapies and treatments are in the pipeline. So I just wanted to provide that as, kind of an example of what we're talking about. Not that I'm personally, well, that's not true. We all have medicine. I was going to say I'm personally involved, but I guess of course I am. We all have medicine that we're taking.
Yeah, right.
But anywho, all right. So bit of a rambly one today, but hopefully, our only goal is we don't aim so high as to think that we would say something that would be a directive or anything. We just want to get the wheels turning for everybody out there, if in case this struck a chord with you in some form or fashion. So we appreciate you listening. And as always, if you want to reach out about anything, you can comment on Substack, YouTube. We appreciate the guy who sent us the info on capital gains structures. You can DM us, LinkedIn, get in touch with us, please. We'd love to hear from you. Other than that, y'all have a good week, and we hope you come back next time for another edition of the Get Invested podcast.
See ya.